All right, well, hi, everybody. Welcome to the Alumni Buyside panel. We're really excited to be wrapping up an exciting weekend for this conference, this virtual conference. And, oh, there we go. Oh, there's everybody. So yeah, my name is Sam Rappaport. My pronouns are he, him. I work at Centerbridge Partners, and I'm a principal in the Distress Strategies and Special Situations Group. Kyle, do you want to introduce yourself?
Yep. So my name is Kyle. My pronouns are he, him. I work at AEA Investors, which is a middle market private equity fund based in New York. I work specifically in our consumer group, and I'm a second-year associate.
Hey, folks.
Okay.
Great. Hey, folks. My name is SK. My pronouns are she and her, and I'm currently a senior investment associate at Macquarie Principal Finance. So we invest Macquarie's balance sheet money in a variety of strategies. I focus primarily on private equity, but I also touch private credit and other asset classes as well.
And Hunter Slacks, I'm a vice president at Warburg Pincus, which is a growth-focused private equity firm in New York. My pronouns are he, him.
Hi, everyone. My name is Ren. My pronouns is she and her. I'm currently an associate at A-Risk Management in its alternative credit investment. And right now I'm mainly focused on CMBS investment.
Great. Well, thanks everybody for introducing themselves. I think Alan will put this slide back up at the end. So if anybody's presentation speaks to you personally, you have an opportunity to reach out by email afterwards if you'd like to. But for now, why don't we just jump in? So, the question that burns in most people's minds is, how did you get to where you are today? So maybe you all can just talk a little bit about your career trajectories, how what you did out of school, and how'd you make it onto the buy side.
I'm happy to start. I graduated from the University of Texas with a degree in finance, and I actually went into consulting after I graduated, so at the Boston Consulting Group. So I took a little less traditional path to buy side and private equity. I think when I was thinking about making the change, to me, I felt like my learning was getting sort of stagnant in consulting. I felt like I was doing the same kinds of projects over and over again. I really didn't feel like I was expanding my skill set, and I felt myself getting less interested. And I think the fundamental problem I saw was that whenever we were doing these projects, I felt like we were focusing on a very specific part of the business. So say I'm consulting for a grocery store, we might be focusing on specifically COGS or like specifically SG&A and stuff like that. And I felt like I wasn't ever getting like the complete picture of what our clients were and like everything that went on. And I felt like that was lacking, and I really wanted to get that understanding. And that's part of the reason I ended up landing on private equity as a next step in my career. Was I thought the question of understand everything about this business, understand everything about the industry, all of its parts, understand the potential opportunity, and make a decision on, is it a good investment, is a fundamentally more interesting question than a lot of the things I was answering on our consulting cases. In terms of how I ended up in private equity, I talked to a lot of people about what the next steps were, and I think that was something that kept coming up. But I really leveraged my O4U network to gain contacts in different places, because I wasn't a former banker. I didn't have all these former coworkers who all went on to private equity. So I think this network helped me a lot when I was looking. And I ended up at AEA specifically because Arting, who a lot of you probably know, she's on the O4U board. I actually saw her speak on this panel 2 years ago or 3, and ended up talking to her, and that's kind of how I got brought in and got really interested. So again, this is a great place to start, a great place to sort of learn about it.
Thanks, Kyle. If I may add over there, just taking a giant step back for the uninitiated, I think the buy side can mean a lot of things. I think this panel predominantly is, private equity and credit. But there are other kind of facets of the buy side that, are more traditionally or not traditionally counted as the buy side. So those would include, I guess, private equity and credit, which we have over here, which is, I think, a fairly traditional path that has a pretty defined almost pipeline. It's very much like in, or at least for my firms or the firms that I've been a part of, it's very much a pipeline of either you're in banking and sometimes, though less often, in consulting, and then after 2 years cutting your teeth on that, you kind of figure your way out to get into private equity. I think there are other paths as well for the buy side, including hedge funds, which is, I would say, in my experience, and just speaking personally, less common, but people who want to go ahead and invest in, public equities or public securities end up working over there. And I think that there's a slightly different path. I can't speak to it too well, but I have friends in banking who ended up over there, friends in consulting who ended up over there. And I think the path over there is less defined. And then finally, there's also venture capital, which again, I don't think we necessarily, I can't personally speak to as somebody or this panel, is more private equity heavy. But that also, I think, could be counted as the buy side and is also a path from, all the way from being a founder to, banking. Those are the typical, I guess, feeder paths into VC that I've seen. So I think just speaking directly to the private equity / credit side, I think what I've seen is it's a very, very traditional kind of defined path where you spend a certain amount of years or, shortly into your time in or at least the way it worked for me was shortly into my time in my banking analyst program. In fact, just 2 or 3 months into my banking analyst program, there was a flurry of recruiters that reached out to me that were like, hey, you're in banking, do you want to do private equity? If so, we're going to put you through this very intensive schedule of interviews where you'll be, spending all day in interviews and basically going through that process and then finally end up with matching with a firm or not.
I don't know if I have a lot to add to that, Sam.
Okay. Ren, did you have a similar path or a different path?
So I actually came from a pretty quantitative background. I went to Columbia University majoring in math finance. So right after that, I joined Citigroup in its asset-backed securities structuring desk. I spent about 4 years there, and my experience was similar to Kyle. I felt like I wasn't learning much. My learning curve was flat. And also for us, it's like how much money the company is making depends on how many deals you originated. So one thing that bothered me is that I noticed that we didn't really care about how the deals was performing because we didn't really buy them. We were just there to originate them. And a lot of times that we start to dig in how the deals are performing is because the issuer, they got asked questions by those investors. They realized that something is going wrong there, then we would help them to investigate into that. So having spent 4 years in structured product, I know that I really like that product, but I want to look at it from a different perspective. And also I want to really have time to dig in deeper. And that's why I started to look for jobs in the buy side. And actually how I landed at Ares was also through an LGBT network. So I think one thing that's really important is to keep talking to your network frequently instead of talking to them when things come up, right? So it's really important so you know what is going on there and also let the other party know where you are, right? And that's something that I think is really important. Yep.
That's great. So SK alluded to this, but maybe Hunter, why don't you talk a little bit about what the recruiting process for private equity was actually like, and really what the steps are if somebody is sort of uninitiated in it.
Yeah, and I realized, I guess I didn't really describe my background at all, so I'll do that for 1 minute as well. I graduated from Penn in 2015. I think I kind of knew that I wanted to work in investing broadly, starting probably sophomore year of Penn. So I think I had kind of focused on getting to a role at either a hedge fund or private equity firm kind of from that point. Ended up working at Goldman, interned at Goldman a couple times in different departments. worked there as an analyst in financial services, investment banking for 2 years, and then did the kind of typical recruiting process for private equity and ended up at Warburg. So I think to Sam's question, basically it kind of keeps moving earlier and earlier, but the process that's kind of been run for, I don't know, at least the last probably decade is essentially that there's 4 or 5 major headhunting firms who reach out to the first year analyst class at all the investment banks and some of the consulting firms, and basically start getting to know them and create large resume books that go to all the private equity firms, and then some private equity firm kicks off the process at some point, and then everyone follows immediately thereafter, and it's call it anywhere from 2 days to a couple of weeks, and all the interviews are done and a new class is hired. I would say that I think in the last couple of years that has started to shift. Warburg in particular has always had an analyst program, which has been a little unusual, where we hire directly from undergrad. We're expanding that more and more, and I would say at this point we're probably at at least 50-50 in terms of new hires generally coming straight out of undergrad versus from banks. I think it's probable that continues to increase, and we might be at more like 75% in a couple of years. So I would say that the process is evolving, but kind of historically, and it'll be interesting to see what happens this year, obviously, with everyone being remote. But basically, it's headhunters and then kind of a rapid couple day interview wave.
Great, that's helpful. And maybe Kyle, I know you touched on it a little, but can you talk a little bit about what it was like to recruit for a private equity role out of consulting? Did you have a broader, more general process, or was it really bilateral because you knew our team?
Yeah, that's a good point. So I did the normal, meet with all the headhunters, go through the gambit process. I think the only difference I would highlight coming from a consulting background is when I was meeting with headhunters and talking to people, specifically was trying to suss out whether or not firms had a history of hiring consultants, because, and this is, I would say, very specific firm by firm, so I can only speak to AEA, but I've had a very good experience because AEA hires half consultants, half bankers every year, and they train them very specifically based on what your past skill set is. And I have had friends who have gone from consulting to firms that typically don't hire consultants, and they end up being expected to have a banker's skill set, and they don't. And I think it makes the first year really hard. That being said, I think there's no wrong path, and I think a lot of those people ended up being very successful. It was important for me because I hadn't had any, I didn't have any banking experience. I didn't know a lot about that side of things, to work at a place that would expect that and know what I was coming in with and what I needed to be trained on. So that was just, in terms of recruiting, that was something I highlighted to the headhunters and to people I talked to. And I got a sense of I basically got a short list of these are the firms where it might make sense for me to actually work. And I think that ended up being a lot shorter than it would have been if I was a banker. So that's the big difference to me, is just, I felt like I was working with a smaller subset of private equity funds, but that was more self-set by me. I had specific criteria based on that. But no, I did go through the full process, and Hunter was saying, it was 1 day of intense interviewing, and then it was done.
Great. SK, Hunter started talking about how the process has moved earlier and earlier. I don't know if it was the same for you in your previous or current roles, but at least we've started to see more folks, skip recruiting in that first year, which is a month after they start in investment banking, and wait until the second year. Do you have any advice for anybody that may be making that decision about the trade-offs between, going after 1 month versus going after a year and 1 month?
Sure. And just to give you some insight into my personal background, just 30 seconds on that. I graduated from Penn. I summered at Bank of America. I decided to go back to Bank of America, and then just 3 months into my analyst program at Bank of America, I had already met with all the headhunters. It was a pretty defined path in my group whereby I worked in sponsors. So I worked with these private equity firms all the time. And so we had a pretty comprehensive training program into getting into private equity. So even though it wasn't necessarily my path, and most people within my group actually left for private or kind of knew where they were going 3 months into the analyst program, they had a defined path, like, I'm going to stay here for 1.5 years in banking, and then I'm going to move on to private equity. In the next year, I know that we had a couple of folks who either felt it was too early for them, either felt they, one wanted to stay in banking as a career, in which case, they oftentimes move to firms like, Centerview or, shops that really like to cultivate you to be a career banker. Or they decided to wait another year, see, they felt, oh, I'm not ready for private equity recruiting, or for whatever, for whatever reason, private equity recruiting just didn't work out for them that year. I think as you're thinking through those decisions, a couple of things you want to ask yourself are, one, do I even like this general investment banking / private equity field as a whole? Because I think, whatever it is, even as a private equity investment professional, it's a very demanding job, and it's really not for everyone. I think we're all being asked to make these decisions earlier than we'd like. And sometimes you have some kid who's, I hate to say this, but you have somebody who's fresh out of, who's 20, 21 and not sure if they want to spend the next 4 years of their life in this field. So it's entirely okay to wait that 1 year. So that's something to think about. I think the second thing you want to think about is, am I prepared to actually go through this process, 3 months into the process? I'm lucky that I had a lot of resources in terms of, I had, friends who were in private equity, friends who could tell me what the path was like, friends who could actually teach me, spend time with me, doing one-on-one interviews with me, running through case studies with me, running through, paper LBOs or modeling exercises with me. I know that not everyone has those resources. And if you have a specific firm in mind that, you feel is, I don't know, a more coveted firm or something that you want to actually spend a year practicing for, then I think it's worth, actually considering, hey, do I actually want to go through this, 1 month, 2 months, 3 months into my analyst program, or actually wait a while and get that practice, get those reps in, so that when I do meet with these firms, I'm ready to do it and I feel completely prepared that I will get the firm that I want.
Yeah, maybe just to add to that a little bit, I think if you know that you want to go into private equity or investing, and you've kind of come to that conclusion during your time in undergrad, and you just don't want to stick around in banking, then obviously recruiting earlier will potentially save you a year. I would say from my perspective, if I was interviewing someone, I would almost really prefer them to have had another year. And so I think there's definitely not a disadvantage to waiting a year. In fact, I think there might be at this point a slight advantage. So that's just something to keep in mind. I wouldn't think, oh, I've got to recruit immediately, otherwise I'll be at a disadvantage.
The only short thing I would add is,
go ahead, Kyle.
I feel like a lot of places are also not filling up their entire class during the on-cycle recruiting process. Like AEA, I know, will fill up a portion of their class in that on-cycle process, and then they'll fill up the rest of it in the on-cycle process the next year. So instead of getting everyone 2 years in advance, they get some people 2 years in advance and then wait and get the rest of them a year in advance, because as it gets earlier and earlier, they feel like there are more and more people just waiting a year. So they don't want to miss out on that talent that's waiting a year to recruit. And I feel like a lot of places are doing that.
And just one more thing I want to add is, we've talked about the pros of waiting a year, but I think on the flip side, it's also worth just mentioning that, if you have a year of experience under your belt, hopefully you've closed a deal or something like that. But even if you haven't, I think the extent to which you're expected to talk intelligently through that deal varies, whether you're recruiting, 1 month or 2 months out of your program versus, if you've been there a year. I think there's a higher bar when it comes to, I'm talking about my deal, I need to know exactly what I did, the rationale, things like that. Whereas if you're interviewing a month into your job, you might not have closed a deal. And so the bar is a lot lower, I think, to be able to actually intelligently talk through a deal.
Yeah.
Yeah, I think a lot of people right now, when you're still undergrad, you're probably exploring your interests and not sure what you wanted to do. And I think considering like a lot of my colleagues, I've noticed that a lot of people, they spent 2 years in banking and they didn't like it, they went to NGO, and there was even a colleague who actually quit the job to become a stand-up comedian. So I think it's totally fine to like do something first and then explore your interest at the same time and keep your options open, and at the same time network with people, right? And then you can decide like what you like later.
Yeah, that's very true. And I mean, one last thing I'll add to this point, just from the peanut gallery, is there is a real risk to going up front if you're not ready, because I will say firms know who they've met before, and that will be flagged by the headhunters. So if you walk into an interview unprepared and just not really being ready to go through it, fair or not, that will be sort of something that firms know before they see you a second time. So just if you're going to go and you're not really sure if you're ready yet, maybe don't cast the broadest net in the first process. Maybe do 1 or 2 interviews and see how they go. And if you really feel like it's not, not something you feel ready for, I wouldn't, desperately try to recruit for 20 different, PE jobs and meet every firm when you're unprepared, because they'll remember the next time you go back. And if you, on the flip side, of course, people have done that and it's worked out okay. The key point will be, why weren't you ready at that point, and what have you done to grow and develop in the years since you last met the firm? Just having a real compelling story, because people will expect you to have one if you do that. Cool. So speaking of that, can anybody throw out how they prepared personally for this process? What were the key things that were, they didn't already know, either through banking, consulting, or college, that they did to prepare for the private equity or credit or CMBS recruiting process?
I guess I can start. I don't know if it's a lot that isn't kind of broadly known. I think, thinking through your story, that's pretty similar to investment banking or consulting interviews, why you want to join X firm or why you want to go into investing. If you have some sort of deal experience or you have something on your resume, make sure you know what that deal actually was. And frankly, if it's something that you kind of worked on for 2 weeks during an internship and you really have no idea what the company does or the deal was about, I would probably just not put that on your resume. It looks really bad if you list something and then, I've had several people where I'm like, how much, what was the revenue of the company, or who are its competitors? Very basic questions, and they just kind of clearly don't understand. And that's probably worse. It's definitely worse than if you just didn't put anything on there. So to the extent you have experience, then obviously making sure that you're as prepared as you can be on those deals and thinking about it from an investing perspective and not just the kind of, transaction perspective. And then I think technicals, there's a lot of materials out there, similar to banking or consulting prep materials that you can use. Obviously, the kind of LBO modeling, depending on what kind of firm you're recruiting for, is maybe the one that is not as stressed. So we have a modeling test as part of our interviews. I think probably at least half the street does. So, just kind of making sure you've gone through those mechanics, and those are really check the box things. We don't say, oh, this person has like an amazing LBO model, so therefore they're hired. It's like they were good enough, so check the box. They'll go on to the next interview.
So I think my process was slightly different because I was not coming in with banking experience. I had to learn how to build an operating state, like the really basic financial modeling stuff, which isn't hard to learn, but I just never done it before. Even maybe I did it in college, I do not remember. The second I graduated, I was like, that's in the past. I don't have to ever thinking about it again. And then I recruited for PE and I had to learn all of it all over again. So for me, I think if you're coming from a consulting background, the big things were being able to really intelligently talk about finance and not sound like an idiot, bluntly, was what I had to focus on, because I could not do that when I decided to recruit, and I very quickly had to get to a point where I could. So I think I actually studied a lot of investment banking interview prep materials, to get like a baseline. And then I studied private equity interview prep materials to like kind of go off from there. And I think that helped me a lot. And I did a lot of like just LBO model, like practice LBO models, just to like wrap my head around what I was trying to build. So I would highly encourage, I would start with like learning how to do a paper LBO, which is just like writing a simple one out on a piece of paper to understand the mechanics. And then once you have a really good idea of like how everything is flowing and how it works, you can learn how to do it on the computer, because a lot of them will. AA actually doesn't have an LBO test, but most places will. So and regardless, I think it just teaches you how to think intelligently about that kind of stuff, and it helps in interviews regardless.
Yeah, I can talk about my experience as well. So prior to me this job, I was mainly, covering ABS product, which is like slightly different than CMBS. So to that point, I actually didn't have relevant experience in CMBS. So I think one thing that that's really important is to highlight your transferable like skills from one job to another. So first, like I had like experience in structured products. So thankfully they fell under the same umbrella. They're all structured product where they have a pool of collateral and based on that collateral, you issue some bond, and also have like good quantitative skill set, which is something that I highlighted in the process as well. And then another thing really important is to think and look at things from your like target jobs people's perspective. So I actually spend a lot of time reading those research reports. And I know that's what they do every day as well. And I talk to those research folks and sales trading person to know and discuss with them about those views in the market. So in the interviewing process, you can show them you have really done your work and you would know what you would be doing at this job, instead of like sounding like you're totally oblivious about what is going on there, right?
I feel like the thing I heard the most from people during the recruiting process was you have to show that you did the work. Like, I think that is the number one thing. And even with the headhunters, I would say you have to show that you've like done the work and you're coming in like prepared. I heard that so many times. And I think it was really true when I was going through the process. That's like baseline is they just want to know that you did what you were supposed to do to get ready, because that alone shows like, okay, at least you like knew you were going to do this, you prepared, and you're like ready for it.
Yeah, I'll throw in a couple of extra things. So I don't know if there are folks in the audience who are maybe less interested in private equity or private credit and are more focused on market-based investing. So hedge funds or distressed public credit or whatever it might be. Everything that people just went through is true. So you still have to know the basics of finance, which are important, and you need to be prepared, for some sort of case study. It won't be an LBO, but it'll be, all the parts of a LBO case study other than the actual LBO. So what is this business? What do they do? How do you think about projecting that business go forward? And then if it's a, equity hedge fund, you would say, what price would you pay for the stock? And if it's a credit hedge fund, it might be, what price would you pay for the bonds? And then on the market side, it'll be pretty important to show that you are a student of the markets, that you follow markets, specifically whatever ones are relevant to the job you're interviewing for. So if you're going into a credit investing job, you should probably like have a good sense of what's going on in bond markets, what's going on in loan markets, what is the Fed doing, where is the risk-free rate, generally speaking. The good news is it's close to zero, and it will probably be close to zero forever. So you might not have to study that question for much longer. But yeah, that would be the one thing I would add for those who are looking at hedge funds is having a really good sense of what's going on in the markets.
Yeah, Sam, actually, if I could just add to that, I actually think that is relevant for private markets as well. And I asked several questions about public markets in interviews. And it's very interesting to see the answers, right? Because I've had a number of people that will say how they're, leaders in their investment clubs in undergrad, for example. And I say, oh, by the way, like where roughly is the S&P right now? And they'll give me answers that are just like completely out of left field. So I would just have a basic understanding, especially if you're going to say you're interested in investing, of, the common equity indices, where are things trading, an earnings basis or EBITDA or whatever, like Sam mentioned, where's the 10-year treasury, where's LIBOR, or other kind of very common benchmarks. I'd also say if you're thinking about preparing for interviews, to the extent that you haven't had deal experience, which is more and more people, I would think about, just picking a public company and kind of writing a stock pitch for yourself as part of your preparation for how you would think about, a private company as well. Because the reality is, like, they're 90%, the same kind of thesis development exercise. Obviously, the level of information access you have is different. But I would recommend doing that. I think if you force yourself to do that, you'll probably get more out of it than if you just read a case study on how to think about an investment.
Yeah.
Yep.
I think one thing I'll add on that is if you are interviewing for private equity, one thing I did was, at least for the shops I knew I was very interested in, I looked at all the portfolio companies and picked a handful at least, if not most of them, and did my research and wrote out my thesis for why I would or wouldn't have invested in the company. I think one is just showing that you did your research and who you're interviewing with and what their assets are. I think the other part is it's a good thought process, and it gets you used to thinking that way, so that when they ask you in the interview, why or why not, if they give you a case study and you're expected to explain why you would or wouldn't invest in an asset, you've already done that thought exercise with things that they already own. So I thought that was helpful for me.
Yeah. So Kyle, one thing you talked about earlier in your last answer was showing you've done the work. To me, that is about all the things that we just talked about, but it also is show that you've done the work about the firm that you're about to interview for. So SK, can you talk a little bit about your diligence process on thinking about which firm to work for? What did you try to learn in advance about a company that you were going to interview for, and how important is that now on the other side as an interviewer to see that a candidate, really knows about the firm?
Sure. So I would say, a lot of these firms that are interviewing for should have websites. Hopefully, I would say, so if I had to, concisely list it down, what I would do is, number one, go to their website, learn everything about the firm that's on there in terms of, what size of investments do they target? Are they middle market, bulge, large mega funds? What are they exactly? Secondly, do they focus on any sectors? Do they have, thirdly, do they have any, particular investment style? Say, for instance, my former private equity firm that I worked at, HIG Capital, was very well known for being a value investor. My current fund is more like a fundamental investor. So do they have any, special sauce? What do they claim is a special sauce that they add that differentiates them from other, private equity firms in terms of strategy? And then fourth, again, I think, as Kyle alluded to, it really comes down to actually understanding the portfolio companies, being able to ask intelligent questions about them. Frankly, for a lot of the firms that I interviewed at, the case that they gave me was really just very lazily based on one of their portfolio companies. The model was basically the portfolio company model. The thesis was the portfolio company thesis. So I would think those four things that I outlined, knowing the website, knowing the kind of just general, sectors, kind of sizes of investments they work in, knowing their strategy and knowing their portfolio companies. And then finally, if you can, perhaps the best thing is actually being able to talk to somebody who works at that firm, who can later, even put in a referral for you, but also definitely ask them intelligent questions about, deals that they've worked on, what they enjoy about the place, and have some, internal knowledge of the company, its culture, as best as you can.
Yeah, I guess I agree with all that. I think from my perspective, especially for kind of the on-cycle recruiting, the expectation is not that you've done 3 hours of diligence on what Warburg does. It's more, do you just have a general sense of like SK said, the type of investing strategy. So I wouldn't feel like you need to spend dozens and dozens of hours researching every firm and trying to find every little detail you can about every firm. We would never ask oh, by the way, list 3 of our portfolio companies and expect someone to be able to actually know what they are.
Yeah, I agree with that. So I guess just to clarify my point earlier, I think it's helpful to note, but I think it's more helpful to go through the thought process of why they invested in the company, and like that's more helpful. Like they're not going to ask you, I agree, to like list out what the portfolio companies are or anything like that.
And then a couple of you have alluded to this, but maybe Ren, I would love to learn a little bit more about this. You know, people for me at least, people is a really important part of any firm. And so can you just talk about any work you were able to do, you know, before you're recruiting to get to know people at a firm, and how was that how was that helpful in the process?
Yeah, I think if you're trying to move to a place, it's important to like build a spreadsheet and that tracks all the firms that you're interested in, and then start to like build network, right? In each firm. And I actually haven't like really, you know, done a lot of work on that. Then an opportunity just kind of like came up at ARIS, because I happened to know one of the person there. So then I just started an interviewing process, and yeah, and then I was lucky enough to land on this job.
Great. All right, last recruiting question for SK, because I think you might be the only one that's done this. Can you just talk a little bit about transitioning between investing jobs and what that process was like? Because obviously, you know, as Hunter kind of alluded to, the normal on-cycle recruiting process does not necessarily do the best job of placing people in the perfect spot. You know, for Hunter and I, it's worked pretty well, and we're both at our firms, I think 3 or 4 years now. But you know, many people switch jobs within the investing community after, you know, just 2 years. So can you talk a little bit about how you made that switch, and you know, is that common, uncommon? Is the process the same, different?
Sure. The thing about, I would say, private equity is it's a pretty diverse field in that you have, you know, all kinds of flavors of, as opposed to, I would say, investment banks, which is, you know, I'd say arguably a more homogenous field. Like private equity has many shapes and stripes. There are many strategies within it. There are many various kinds of cultures of firms that I was at, that, you know, you can be a part of. I think a lot of people, at least within my program, my private equity program, the way it's structured is really as a 2-year program. And then either you get the return offer or you don't, or you decide to go on and do an MBA, or you decide to move on to another private equity firm. I know that at my firm, my former firm, HIG Capital, pretty much everyone in my class got the return offer, just declined it and decided to go to other firms, just as a function of they didn't necessarily see themselves over there, or they didn't, you know, I think some of them just looked at the senior folks in the firm and asked themselves, do I really want to be them in 10 years? And many of them just said no. So I think many people's paths, you know, diverged, you know, from private equity. Many people went to things like, you know, business development. One decided to go to an NGO, you know, one decided to go off and be a DJ. And frankly, I think some of the most successful people at my firm decided to go off and do a startup. And it's funny, 4 years later, after starting his startup, he hired his MD from the private equity firm, which is mind-blowing to me. But if I talk about what the actual process is of moving, first of all, when you've decided you want to move, I think headhunters that you've been in touch with, particularly at firms that you've performed well at, or people that placed you in your current firm as well, typically are floating around the space and again, want to make another commission off of you. So they are loosely in touch, and I recommend staying loosely in touch with them because again, they can be incredibly helpful, especially for off-cycle recruiting, where they come up to you and say, hey, you know, somebody just left this private equity fund. Is this something you would potentially be interested in? Are you interested in making a move? Then let's talk about it. Secondly, I think, again, deal experience becomes a whole lot more important. Being able to, you know, speak intelligently to the deals that you've done, being able to show, you know, what your contribution on that was, fairly or unfairly. I think deal experience is really, really valued or overvalued when you're looking to move to your next fund. So to the extent that you can close a deal and get that under your belt, that would be, you know, very advantageous. And then finally, I think, you know, all the interviews that you go for is really just a matter of figuring out if that firm is a fit for you just as much as you are a fit for them. So frankly, I think, you know, when I was going through the process as a youngling, being in my analyst program, I was really just looking to get into private equity. I don't think I necessarily ask myself the question of, do I see myself being a partner? Is this even the kind of firm that has a partner track? I think those questions become a whole lot more important when you're, at the level that I think I currently am now, being a senior investment associate, looking to become a vice president and stay with this firm a long time. You want to ask questions like, do you need an MBA program to, advance within your field? Is that expected? Do you have a partner program? How many people leave after X number of years? What's the attrition rate? And just generally, what is the culture like and do I fit into it? So I would say the process is fairly similar to, whatever folks outline for the private equity recruiting process, same amount of work that you need to do. But, I think you just need to have a longer term orientation when it comes to switching firms.
Thanks, SK. That's really helpful. All right. So given this is O4U, I do want to spend a little bit of time about just talking a little bit about what it's like to be LGBT on the buy side. So anyone can take this, but really the questions are, were you out during the recruiting process? Did that play at all a role in your recruiting process? Does it play a role now for you in your job, whether that's, related to internal workings at the office or with LPs or portfolio companies? Can you just talk a little bit about that experience?
You want to
Go ahead. Yeah, go ahead.
No, I was gonna say. So for me, it was not a big part of my recruiting. It never really came up. I'm trying to remember. I'm not sure if I had anything on my resume that would have suggested it, but I might have. But regardless, it just wasn't really a focus. I also really didn't spend a lot of time trying to decide which firms I would be interested in based on their perceived, I guess, LGBT friendliness. I think the reality is, as opposed to the large banks and consulting firms, most buy-side firms are quite small, and as a result, there's not necessarily any difference in terms of their culture, but they're just far fewer people, and so you're not going to get large LGBT networks at most firms. I mean, I think we technically have one, but it has 4 or 5 people, so it's not. Yeah, it wasn't a big driver. I'd say in my work, also not a big point of focus. I think most people that I work with closely know that I'm LGBT, but they're not. It's not really a conversation point. So I would say if you are looking for or really value kind of having a large LGBT network, I would, spend some time at the consulting firms or the banks, because I don't think you're going to get that same experience at any buy-side firm.
Yeah, I agree with that. Because I got connected to AEA through O4U, through an O4U contact, it did play into my recruiting process, but it was only to the extent that I was using my network, and my network includes queer people. I don't think it didn't come up when I was really thinking about which fund to join. I think it's hard because, like Hunter said, they don't have AEA has less than 100 investment professionals, and there's only 2 out queer people at the fund. So I think it's harder to sort of get a sense of how friendly they are just through an outside perspective when they don't have these large ERGs and stuff like that to connect you with. I think I got perspectives through people I knew at the firms, but I never heard anything other than it's never been an issue for me. And I think it has been a big shift from BCG, which has a very large and very active LGBT network, to AEA, which I haven't felt I've never felt less accepted, but I don't spend time every week on official LGBT work things. I don't have gay work friends. So I think that was the big shift to me. It hasn't bothered me, but I would agree with Hunter. If that is something that is really important to you, and you feel you need that support network specifically in your place of work, then I would try to find either a bigger shop or think about other options, because most of the places you end up, you might be one of a few, if not the only out queer person, or even if you're not out, the only queer person at the firm.
Yeah, so actually when I was interviewing, I already knew that two of our team members who are also in this conference, Alex and Andy, they actually funded the LGBTQ ERG in our firm. So I knew that it was like a really LGBTQ friendly place. So I came out in the recruiting process and received great support, which is really great because I felt like the true myself like got embraced at from the start, right? And I also came out at Citigroup, but that process actually took me a while. There was this like, exploring process, trying to test out what people's reaction would be for this. So this is something that's really great about Aries. I think they have done a lot of work to make this place really LGBTQ friendly.
Yeah, that's great. I mean, one quick tip I'll give to everybody at this point, you know, this might have not been as useful 3 years ago, but I think today, you know, every large or medium sized buy side firm knows about O4U at this point.
Yeah.
And so there's like probably 15 investment firms that, or, you know, large financial institutions that have investment roles within them, like Macquarie, who's been like a really long time supporter of the conference. So like at this point, if that's important to you, they should be a sponsor of this conference if you want to work for them. And so, you know, you can just scroll down the list of O4U sponsors and you probably can find a point of contact that can tell you a little bit more about the recruiting process, roles you're interested in. So again, you know, that's just a really easy way to figure it out at this point, because all the, a big chunk of the buy side is a sponsor of this conference.
Yeah.
Maybe, I don't know if any of you have had a chance to participate outside of your firm in any sort of LGBT, networks, but can anyone talk about sort of just the broad alternatives LGBT community, and have you felt like you've been able to be a part of that or benefit from that in any way?
Yeah, so I know there's, I forget which headhunter reached out, but I think the headhunters partnered with maybe someone from KKR and started this like LGBT mentorship, LGBT in the Buyside mentorship group. I don't know if anyone else on the panel is a part of it, but it's like a very light touch, like, hey, like, are you interested in doing this? A couple of people said yes, and then they matched associates with like VPs or partners who are mentors. It's the first year, so I'm not sure if that's going to continue, but I think for me, before they did that, I had a very distinct feeling that there were less people, like less LGBT people in Buyside than there actually are. And I think that was nice. Like it gave me like exposure and access to a broader group of people that I did not know existed. So that like made me realize there's actually like quite a few queer people in Buyside jobs. I think I found that because there are, in my perspective, so few queer people in buy-side jobs, they tend to be really willing to help other people who reach out. So like mainly I've leveraged the O4U network. I feel like I keep coming back to that, but that's kind of like my main queer professional group of friends. And I think like through that I found other people. So I think like it's a really good network. It's a little harder to find, I will say, but I think this is a great place to start to sort of get into it.
Perhaps there's another organization or a few other organizations that I'm part of. One is called Hudson Network. I'm not sure if folks on this panel are part of it, but it's basically a more informal network for folks who are later on in their career, actually, on the buy side or things like that, who just want to network and get to know a couple of amazing folks. Like I know we had an SF session that had Keith Rabwa from the Founders Fund, and it's a pretty it's a small but pretty high profile group, which is great to be a part of. And then I think I'm also part of, a more, I would say more for the juniors. It's called the LGBTQ and PE and SF group. And we always joke about how many letters there are in there, but it's more for folks at, the junior to mid levels who want to grab drinks and have fun and chat and complain about their work life together in a bar.
That's great. And then wild card LGBTQ question from the audience was, has being a part of the LGBTQ community ever helped you source a deal? Or do you anticipate this being important or relevant in the future?
We associates at AA don't source deals, so I can't speak to this, but maybe someone else can.
It is not for me, but maybe at some point.
I actually do know people who have sourced deals through like dates they've been on, but that is not my personal experience, so I'm not going to tell the story.
Yeah, I haven't either, but looking forward to that.
Maybe I should start doing that. It's a good idea, actually.
Not
I
really.
will say there's.
Go ahead.
Oh, go ahead. No, you go ahead.
Well, I think it's pretty public by now that Grindr was up for sale.
I was just going to talk about Grindr.
And I definitely got a look because, people knew that I was part of the queer community. So that was definitely very helpful. But at the end of the day, I think, unfortunately, a lot of buyers weren't inclined.
Yeah, I was going to say the same thing, that it was pretty public that Grindr was for sale, and it was definitely just immediately a strange topic around the office, because anybody who could be relevant to look at it just felt so uncomfortable talking about it, and then also uncomfortable asking me about it. So hopefully someday that's just more normalized and easier to talk about. But that's a fun story to end the non-audience Q&A with. But I guess, Alan, I don't know if I didn't see any other questions in the chat. Maybe you've gotten some one-on-one. If anyone in the audience does have a question, just post it or let us know. Otherwise, I can ask, one or two more.
Yeah, I did get one about, as folks are starting to, get reached out to by headhunters as they're hitting the desks, what are some advice you have for the first meeting? Because there seems to be a lot of pressure around that.
So first meeting with whom?
With the headhunters in terms of responding and managing that relationship, as they are kind of the gatekeepers for many of these firms.
Yeah, I would just treat it as if someone from the firm had reached out to you. I mean, they're not going to, unless they've changed their tactics in the last couple of years, they're not going to drill you on technical questions, but they will want to talk about, your interests and, what firms you want to look at, and, what firms are your top priorities, and get some info on your background. So I would just treat it as if it's an interview.
I think the thing I didn't understand walking into headhunter meetings that I wish I did was a lot of these headhunters are former bankers, or they know what they're talking about. They've had technical jobs, and I think it's very different than the HR recruiters you interact with when you're recruiting for consulting or banking, who are meant to make you like them, but they typically don't actually they've never been a consultant, or they've never been a banker. It's a very different type of recruiter. So I think being walking in, they're not, like Hunter said, they're not going to grill you on a lot of technical stuff, but just walking in, being tight on knowing why you want to do private equity, knowing kind of where you want to go within the spectrum of funds. I think it's really helpful to be able to tell them, I know I'm interested in X industry and X location, this size fund, and never closing yourself off to other opportunities. But if you can be specific, then they'll have a better idea of, oh, if I match him with this fund, he has a higher chance of accepting because he indicated he's interested in that. So I think being more specific with them is helpful.
Thank you. And as we are nearing the end, I'm going to also throw up the screen with everyone's contact again. And then I got another question regarding off-cycle recruiting. A lot of folks on this panel obviously went through on-cycle recruiting, and there's been a lot of discussion of that, but is there any advice to approach that? Off-cycle recruiting, I mean by that.
Sam, are you talking?
Sam,
Oh,
you're on mute.
I'm talking into mute. Welcome to. We were doing so well. We made it almost to the end of the panel without any stereotypical Zoom mistakes, but I had to fail.
Oh my God.
I was just saying we did talk a little bit about one type of off-cycle recruiting, which is just waiting a year and doing it. I guess it's still on cycle, it's just on a slightly different cycle. You know, from our perspective, you know, Kyle talked a little bit about this. You know, we don't fill our classes every year necessarily. You know, if the candidates are super strong in an on-cycle year, we will fill it, but we don't stretch to do that. And we have been leveraging lateral recruiting pretty frequently. So that can be from other investing jobs, or it can be from, you know, second or third year analysts at you know, in banking. I mean, I can't speak too much to what that actually would be like to do off-cycle recruiting for PE or credit from banking or consulting. But you know, from our perspective, from the firm's perspective, what we're looking for obviously are people who have, you know, had good experience in their jobs. And so as SK said before, our bar is definitely higher for folks who are doing lateral recruiting or off-cycle recruiting. And just more, you know, higher bar also on the question of why Centerbridge, or why, you know, why AEA, or why Warburg. You know, you won't have been going through this crazy on-cycle process, so you don't have as much of an excuse for like not having done the research and not having done the work about why you're interested. That's just at least the way we perceive it.
Oh, sorry. Great. Well, thank you all so much for being here. Really appreciate you all taking the time and volunteering. If there, obviously all the panelists here are really open to speaking about this more. Their contact information is here. You can also DM them on Pathable. So fun.